today to be speaking with Andrew Wellsted, who's a partner at Anderson Tax here in Johannesburg. Welcome, Andrew.
Thank you for having me.
So we're going to talk about some of the latest trends from your practice in a minute, but before we get into that, it'd be great to hear a little bit more about your background and what you do here in Johannesburg.
Sure. I grew up in some of the big law firms in South Africa, and I've moved around a little bit, as one does. In general, my life has covered banking tax, corporate tax, and more recently, quite a big focus on international tax. The team at Anderson is a generalist team. We're multi-skilled, so we would deal with most of the issues that you would expect a sort of large corporate law firm to deal with.
Okay, terrific. So first of all, just coming to one type of client that you might deal with, the fund managers and institutional investors. What are some of the considerations for the foreign fund managers looking at acquiring assets in South Africa? What kind of things might they think about?
Sure. Well, there's a massive governmental drive. We're trying to attract investment. And so that's ongoing. Whether we're getting it right or not is a slightly different question. We need to sort out things like grey listing. Your viewers would probably have heard that South Africa is on a FATF grey list, or potentially on one. We're waiting determination on that. The rand is a little bit volatile, so it can move. So the ideal things that we're trying to do as a country is start get our ratings up from the rating agencies, make sure we don't land on the grey list, and then I think we'll be more attractive and more stable from a currency perspective as well. Obviously, regulatory-wise, the big one that foreign investors are concerned about is often exchange control. Exchange control is not well understood internationally. You don't see it in a lot of jurisdictions. But exchange control has got to a point in South Africa where it's not so much an impediment. It's just a process that, if you manage it correctly, will not interrupt your investments at all.
Because if the fund manager realises some proceeds on a sale of an asset, then they have to work through how they would extract those proceeds back into an overseas fund or something like that. What was the sort of typical roadblocks or hurdles that they'd be going through?
Exactly right.
Yeah.
So the trick is to do your homework, as with most regulatory issues, right? Beforehand, make sure that you understand what the exchange control regime applicable to your investment is. There's a very simple rule, though. If the money comes in, the money and the returns can go out. Obviously, we wouldn't be able to encourage any inward investment if that weren't the case. But it's important to know, if I'm investing in equities, for example, what are the rules around regularizing my investment in equities? What groundwork do I need to lay down? And as I say, it's predominantly a reporting function now. And if you get things right on the way in, and you tick all of the boxes on the way in, you're not really going to encounter a problem on the way out. So exchange control is very much about getting the right advice, understanding what investments you want to make, and then understanding what reporting needs to be done on the way in. And as I say, that'll free it up for the way out.
And what about the tax considerations, minimising any leakage for their investors?
So South Africa's got a surprisingly complex tax system for many investors. To some extent, if you're talking friendly investment, often they're friendly rules. Our rules are quite complicated, but nothing that you wouldn't expect to see in most Western democracies, to be honest with you. So again, from a tax perspective, knowing beforehand what your investment is likely to be, what are the taxes in South Africa, and then, of course, without treaty shopping, understanding whether or not the investment can be made more efficiently from another jurisdiction. Is there a double tax treaty in place that minimises the return? The return is often interest or dividend returns, sometimes royalties. Understanding what the background in South Africa is, the regulatory framework is on the funds that you want to invest is important. And then you'll be able to structure it to optimize it. We are a relatively high tax jurisdiction, but as I say, we are trying to encourage investment. So there are a number of ways that investors can structure their investments in a friendly manner. Okay.
And are there certain jurisdictions that come up frequently for where that fund might be domiciled?
Yeah, so there definitely are. Mauritius is one that you will hear often. Mauritius is interesting because South Africa is still a good jumping off point for investment into Africa. But at times it is useful to go via Mauritius or to use Mauritius in some way. Mauritius has got a good double tax treaty network with the continent, so does South Africa. And Mauritius and South Africa have got a double tax treaty. So you do find a lot of inward investment into South Africa still comes via Mauritius. Given our trading relationships with Europe, though, there's a lot of trading that comes in via Europe. So again, it's a question of understanding what your investment is. Is there an easier channel? What are my returns going to be? And then making sure that you tailor it before you invest the cash.
Okay, thank you. And just turning to more entrepreneurial clients, business owners here, are you seeing them investing abroad, diversifying, maybe starting new subsidiaries in the UK, Europe, or elsewhere? What trends are you seeing from businesses here going global?
The trend is very much the businesses here are going global. You see either the recreation of a sort of mirror image of a local business, or starting new businesses. And there are a range of reasons for that. But at the moment, the economy is going through a difficult time. And you find that local entrepreneurs and African entrepreneurs are trying to spread their risk. So previously, you wouldn't be surprised to find large businesses that operate predominantly within South Africa. They may operate on the continent, but their eggs are all in one basket, if I can use that phrase. That's definitely starting to shift. So people are seeing the opportunity to diversify and lessen their risk in relation to South Africa Inc., if you like. And they're trying to explore ways to do that. And one of the things that has made that possible and has encouraged that move is the slow relaxation of exchange controls. The exchange controls have been reducing slowly over time since sort of 2000, around there. In 2020, in the budget speech, the finance minister, who was then Tito Mboweni, announced that there would be an overhaul of the capital flow system. And that has been slowly implemented. You may have heard about changes to the looping rules that happened early in 2021. That was a very significant change. So
they bring reinvestment back into the country, don't they? Provide a way for money to come back and invest here.
Yeah, so loop's a very interesting thing. A loop was an exchange control concept whereby a South African such as myself was unable to own a South African asset via an offshore structure. If I wanted to own a South African asset, I had to own it directly within South Africa. Now I can externalize that ownership, if I can use that term. So that does create great opportunities. And although a lot of people see it as, well, that's capital leaving the country, or that's investments that South Africa is being cheated out of, I don't think it is. Encouraging entrepreneurs to expand their network and expand their product range is probably a good thing. So we have seen there's definitely a trend whereby South African businesses are looking to foreign shores to reinvest any surplus funds or to grow their business going forward.
And just coming to a few of those different countries, I mean, the UK is a favoured destination, very strong links between South Africa and the UK. We've had a presidential visit this week coming to see King Charles, which is terrific. But what is it that you see of, what's your read on the UK economy, interest in South African businesses coming to the UK? What's the temperature like?
Look, there's a long historical connection, as you know. So the UK is a favoured destination. Number one, the languages. We inherited your language, as it were. But secondly, a lot of South Africans can live in the UK. We're part of the Commonwealth. There's strong trading ties. So UK is one of the jurisdictions where people are expanding to. And I think people perceive that there will be opportunity on the back of Brexit because the UK will be looking to stimulate their economy. So there's a lot of interest in the UK, a lot of interest in Europe, and of course Africa. Africa is a market. It's obviously a diverse market. I don't want to sound like it's one market, but Africa's a diverse market where a lot of South African businesses have operated traditionally, particularly in sub-Saharan Africa. So we see lots of investment into Africa, into Europe. The most difficult and challenging thing is opening a bank account, interestingly. If you can get that right, you're in business.
What are some of the sectors that you see growing most quickly for this intra-Africa trade? Is it like the fintechs that we read about? Is it certain parts of the modern economy? Or is it actually more of the traditional economy, which is going cross-border trade? What do you see on that front?
I think it's quite diverse.
Yeah.
There is a lot, I mean, for the size of the economy, there is a lot of focus on fintech in South Africa. A lot of IP generation and creation. So we do see a lot of that, and in general, the perception here is that once you've got a proof of concept, international ownership is preferred. And that is still the legacy of things like exchange control. If you want to sell your fintech you want it to be outside of an exchange control net, which I think is something the government has realised. But we're seeing it cross-sector. In industry, import, export, all sorts of different businesses that people run. And as I say, long-established family businesses or closely held businesses within South Africa are starting to shift their focus, or at least create a new outlet for their product and their services, which then, as I say, de-risks them a little bit from having all the eggs in one basket. So it's quite diverse, and it does. Europe is a big one, Africa is a big one, but again, you'll see activity in a number of international markets.
Okay, terrific. And just coming to the tax dispute side, I mean, where do you see disputes arising with the South African Revenue Service?
So it's a very good question. The South African Revenue Service, well, the South African tax base is interesting. Tiny tax base. An economy that probably has maybe shrunk a little bit since COVID. And so you don't have any new taxpayers in the base. That's the danger. We've got a big population, tiny tax base in terms of individuals, and relatively small tax base in terms of corporates as well. So there's a natural inclination to, squeeze the tax base that you have. But I've been impressed by successive finance ministers who also realize that you need to grow the tax base. You can only squeeze a tax base so hard until it ups and moves.
Or particularly with trends in global mobility and things like that.
Exactly. So are disputes on the up and up? Absolutely they are. I think that there's a perception, and I think it could be largely sustained, that during the sort of so-called state capture years, the SARS took a knock. You may have heard about, they had some consultancies and did some restructures that apparently negatively impacted their operations. So SARS are on a new drive under Edward Kisvetter, who's the new commissioner, to reskill and upskill and get going again. And you can see that in the press. He's a very vocal proponent of that sort of thing. And there is a perception that there are still schemes, as in Europe, etc., that are adding to base erosion and profit shifting. Probably true to some extent. So tax disputes is an area that as a law firm we're interested in. We have deep expertise in it. And it's across the board. International trade, though, and international structures is still a key area. Many South Africans over the years had funds abroad which were illegitimate and which have come out to some extent under the Common Reporting Standards and other programs. But identifying those funds and monitoring them and making sure that tax is paid on them is a key feature for SARS, and that's where a lot of the disputes come from.
Because it's highly technical, complex in the cross-border space. But are you seeing that CRS and Information Exchange has just shifted the conversation with clients because there's more information around about their affairs internationally? It's not credible to bury your head in the sand so much, or what's the tone of those the kind of conversations around these global standards and flows of information?
Yeah, so we call them detection structures. There used to be a propensity for structures which they'd say, well, how would anyone find that? Okay, that's gone. Things like the Panama Papers, number one. That's not even a governmental program.
Just leaks.
Exactly, a good old leak. And there's still the classical, I got divorced, I was nasty to my mistress, fired somebody, that comes up. So, and I think the ability for anyone to manipulate data these days poses a danger to anyone who's got a structure that is anything but visible. You don't know where your information is going to pop up. You don't know how it's going to pop up. The mutual cooperation treaties are a worry. As I say, things like Common Reporting Standards. We're seeing more and more that those types of programs are successful in eradicating, the who's going to know structures, and the detection structures. So are you able to still trust your affairs? Of course, the Duke of Westminster case is still key in our sort of legal history. But as I always tell my clients, that structure I'm proposing for you, I would be happy to take the opinion and sit down with Edward Kisvetter and have a cup of coffee with him. And that's really where you have to be at. You have to say, if anybody found it, I could defend the structure. Sure, there may be efficiencies, and there's always ways to skin a cat that may be better than other ways. But the sort of old detection, hide things in your bottom drawer. Those days are gone, unfortunately.
So just looking at like the robust kind of modern structuring options that entrepreneurs and families are using for wealth today, I mean, there's obviously a whole variety in the toolkit, from pensions, insurance wrappers, trusts, company structures, funds. But what is it that you see? What are the different scenarios that you see, and how you see people using these parts of the toolkit?
Yeah. So I think the first big trend is towards offshore, just like in the corporates. In fact, we're trying to shift the conversation a little bit to say, you know, your estate planning and your corporate planning are not different. They're the same thing. They need to be aligned. They need to be thought through, and they need to act in a lockstep, so that as you enhance the one, you don't create leakage on the other. So there's definitely a trend in estate planning towards offshoring, and Loop Structures has enhanced that, of course, because now you can have an offshore structure that not only owns your foreign investments and assets, but also your local assets. So just as I said, corporates are to some extent de-risking from SA Inc., so should your ownership of that corporate, because that's part of the leakage. We think that's and again, we don't think it's an unpatriotic or negative step. It's just making sure that your eggs are not, you know, if you're in South Africa, one small example, but it hits home. If you're in South Africa, because of exchange control, you've got to hold all of your currency and assets in rand. The rand just is volatile. Whatever the reason for it, it's volatile. So being able to hedge by having some assets held in dollar or foreign currencies is really important. So there's a shift towards offshoring, number one. As to your second question, or the second part of your question, what structures do we see? Well, trusts have been with us a long time. They're still viewed by many as robust, and they
can Settlors exercise a lot of control here, or like in the UK, there's a lot of tax rules to kind of minimise Settlors being involved in structures. But what's the balance here in terms of the control people are giving up when using structures?
I think it's safe to say that you need to be willing to give up control.
Yeah.
You give up ownership, you need to give up control if you want to be robust. And it's an important conversation that's not often had. You know, the ultra-high net worths from South Africa have had money abroad for a long time. With looping, we're getting into a new market. Still very high net worth, don't get me wrong, but haven't traditionally had offshore structures. And that's actually the starting point. You know, whether you put it in a Guernsey pension, which, by the way, is something we see, or foreign insurance wrapper, which is also a positive or a very popular alternative, excuse me. In all cases, if you are managing that thing from South Africa, you create a danger for yourself. So you need to have structures where you give up control, you obviously give up ownership in all cases, and you operate that way. You change your operations. And tying back to something that we said earlier, are South Africans expanding their business operations? Yes, they are. That's tough when you've got a business operation. You know, an investment portfolio, you can maybe get your head around.
A discretionary mandate, they run the mandate, but talking on an operating business.
On an operating business. And what a lot of South Africans are realizing is that the old plaque on the wall no longer suffices. As we said, there's much more scrutiny and much more available information. So if you are going to go down the road, particularly with an operating structure, you need to have people on the ground. That's the bad news. Up your costs. Okay.
Substance is key around those structures.
Substance is key.
Yeah.
But it's, you see a lot of people look at it, well, it's a cost-benefit analysis between the tax I save and the cost. It's not. It's also making sure that you have some offshore operations, some treasury function overseas in dollars, where you can maybe raise funds for the group. So it's a much more complex, nuanced discussion than just what's the tax versus the costs.
And I suppose that point on control is part of a bigger question, isn't it, in succession planning? You know, is that moment where you're making arm's length gifts to children or putting it in a structure, and that great wealth transfer is a big moment, isn't it, where clients really need hand-holding and advice and a bit of guidance as to how they should be doing it. Once they've acquired substantial wealth, they know they need to make plans for that in the future. I mean, is that an integral part of what you're trying to do, is work with business owners to sort of navigate that difficult period?
And it's even more acute in South Africa. Again, without being negative about it, a lot of people in South Africa, sort of middle class and upwards, are starting to consider their options overseas. there is demand for South African skills. In general, the education system has remained intact, and South African workers are sought after. So people do have options. If you have UK ancestors like Ida, you can go to the UK and live there. So the transfer of wealth is very important, but it's also making sure that the structure that you transfer into is flexible for the next couple of generations, so they can be mobile. But you can tell me, I don't think that's only a South African thing.
No. I mean, future-proofing the structuring that you're doing, particularly with like beneficiaries in the US, beneficiaries in the high tax, complex jurisdictions where structures might be used, is a key to stress testing for the future, isn't it? And a lot of advisors I speak to try and do that forward planning and make sure the structuring they're spending time setting up obviously has the longevity that they're looking for.
Absolutely. I think wherever you're based, the notion that one of the grandchildren may end up in the US and another one may end up in Australia or China is a real thing.
Absolutely.
And so your structure not only has to be aimed at seamless and efficient transfer of wealth through the generations, but it needs to think about the locality of where they might be, and it needs to be flexible.
Interesting, yeah. And just moving towards new areas of the economy that you've also become involved in, on crypto and digital assets is an area you're now starting to work with clients on as it crops up more in their asset base. What are you seeing locally there for the activity of investors owning crypto and digital assets? What are the sort of things you're talking to them about?
So there's massive interest in South Africa, and one of the reasons was that there was actually an arbitrage opportunity on our exchanges. In other words, if you could get money overseas, and we know that exchange control regulates that, and you could buy crypto overseas, and you could then bring that crypto back here, you would almost certainly, in almost all cases, make a profit, because there was this arbitrage opportunity. So crypto's been really front of mind for a number of people. It hasn't been regulated in South Africa. It's only becoming regulated now. We're just starting that process. So it's been very, very interesting. But again, to me, crypto, whether you see it as a currency or an asset class or something in between, again, I think it's important. It highlights the importance of where you structure it. Where do you own it? How do you own it? What are the cash flows? Where do you want them to end up, et cetera, et cetera. I think a lot of people have got themselves into trouble in crypto, whether they perhaps did some trades that weren't properly disclosed to exchange control, or they got caught in the big downturn now. You know, when the market was hot, a lot of South Africans were looking at that market. But it's not going to go away. Blockchain's not going to go away. And there really is a lot of interest in South Africa, and some of it stems from that arbitrage opportunity that existed.
Because there's also now opportunities to incorporate these holdings into structures as well, isn't there? There's more trustees in Europe that I speak to that are looking at how to hold crypto in a structure, particularly they see the value rising long-term. Custody solutions, I mean, this is an interesting part of the debate, isn't it, with crypto. As people start, the asset class matures, it's something of value, people look at it for succession planning. I guess that's the next phases, isn't it, where people have something of real value that they want to actually make as part of their succession plans.
It is, but it's a very interesting asset class, because some of the financial institutions will hold it for you and they'll contemplate it as part of your portfolio of assets. But you try and open up a crypto trading business and get a bank account.
Yeah.
Really tough. I mean, cannabis is another one.
Yeah.
There's a lot of interest in cannabis in South Africa and the growth and export. Some jurisdictions won't bank you. And so when you're entering this market, you can't just assume that, you know, it's like I'm investing in equities or anything else.
You make a profit and you'll realize that into fiat currency.
Exactly. You have to realize,
not so fast.
you know, because of the suspicion, particularly, obviously some of the cryptos and some more than others have been affiliated with terrorism or you know, cash flows that are not easily traceable. It's very important to do your homework, and I think a couple of South Africans have come unstuck. As I said, they've either breached some regulation or they've taken a bit of pain. But simple things like, can I open a bank account? I can hold crypto? Can I trade it? Can I do the arbitrage? What are the rules around that? They do make it a slightly more complex asset class, But there's been a ton of interest from South Africans, and it's something that I don't see disappearing. And for many, it's linked to blockchain. Blockchain and Bitcoin are the same thing. People are realizing that it's not, and there's a lot of interest in blockchain and what can be done with that as well.
Interesting. And we've got the networking dinner here tonight at the Radisson. We've got people from many different jurisdictions coming down to come and meet local professionals. Do you work a lot with other intermediaries around the globe, both obviously within the Anderson network, I'm sure, but externally too? What are the kind of intermediaries you tend to partner well with? Very
much so. So I actually had a cup of coffee with one of the lawyers from the UK today. And even though I'm in the Anderson fold, those relationships are very important. So the types of people that we find ourselves mixing with a lot in this scenario is firstly other lawyers or accountants who are giving consulting advice to clients, asset managers and investment managers.
To get the structuring right.
They want an architect to design it. They want to invest, but they need to get the structure right. And then management companies as well. The Channel Islands, almost all of them have got a very strong management company history. And again, we're seeing more and more. I think it's a very positive thing, but it does come back to a little bit, what are your options for illegitimate structures? The management companies now want tax opinions. If they're opening a trust, or even in some cases with the Guernsey pension products, which are quite popular, they want to see that the people have done their homework.
Needs to be advised, yeah.
Absolutely. The number of times clients come in and you ask them about a foreign structure and they say, oh, well, you phone David. Then you phone David and say, I don't give tax advice, so please be aware. So very important. That interaction, and it's becoming more and more crucial, between the person who's designing the house and the person who's going to put the furniture in. So what does the structure look like? Clients often hate it, but let's say there's an immigration to the UK, which was the case we were discussing this morning. That South African needs to know what the tax implications for them are when they leave. But ideally, they need to do their research as to what should I look like when I arrive in the UK? In other words, is there some ways that are better than others for my assets to be held? And you and I both know there are. So how do I hold my assets? And if they've got asset managers, loop them in. Make sure that they understand it. So it's an ongoing conversation. It's something we do a lot. We work with the different consultants that work with families and family offices to make sure, again, that there's alignment in the thinking about the structures.
Terrific. Well, look, Andrew, terrific to talk to you today, and I look forward to sharing this interview.
Thank you for having us. Cheers.
The latest technical content delivered through global conversations with professionals for professionals.